Well, ET now wanted to gauge the impact of the COVID second wave on the hospitality industry and what the future is. And we spoke to Puneet Chhatwal of Indian Hotels, which runs the Taj brand of hotels, to give us a deeper insight. Well, his view is that the second wave has been very devastating for the tourism industry, which had begun to recover, but they are seeing signs of recovery far quicker than the first wave. So there is a lot of precaution, but a lot more increased activity. He believes that they did see a huge impact last year, virtually zero revenues in some of their properties, but companies that have legacy brands, have trust, have the ability to raise capital and can manage to survive. Going forward, he does see consolidation and M&A in the tourism industry. That was happening in any case, but he said due to COVID, it's being accelerated. Puneet Chhatwal is also very confident and echoed what N. Chandra, the chairman of the Tata Group, had to say regarding expansion, that will continue. They've added 70 new signed 70 new contracts, added 40 new homestays to the business without using any capital. So they are not using their capital to expand, but they are expanding at a fast clip due to the asset-light model. In fact, the expansion of Ginger brand of hotels is going to continue, as that too is a high-margin business. He also said that the homestay demand has been very strong and they see positive EBITDA margin growth going forward. The company has also managed to see domestic travel picking up steam. So cities like Rajasthan, Kerala, Rishikesh, Shimla, etc. has seen, even Goa has seen very steady occupancies, and it's going to be the domestic travel that will lead growth. But the teams within also say that there will be a very strong comeback in international travel, particularly in New York and London. For instance, we've already seen the Maldives and Dubai see steady occupancy growth, according to Mr. Chhatwal. He also believes that these new revenue streams like Qmin and hospitality at home have been very popular and have been key revenue drivers during this very tough time. So innovation, of course, is key, and they have concepts like virtual celebrations that have become very popular on the Qmin app. And they provide, Qmin as a platform provides nearly 50% margins versus the lower margins that you get from the traditional hotel business. Even AMA and the Reimagined Brandscapes provides a significant contribution to the EBITDA, even though it might provide a very small contribution to the overall revenue pie. In terms of travel trends going forward, he says that long-term travel with longer duration is going to be now the new travel trend. There will also be a trend of leisure travel plus business travel combined, because a lot of people will take their work and work remotely. And he also believes that this quick turnaround travel, that's going to take time to come back, where you go traveling to a further destination and come back within a span of 3 to 4 days. That's going to be avoidable for some time now. The industry has managed to curtail costs. The company itself has cut costs by 40%. And he believes that going forward, pent-up demand will lead to a disruptive demand pattern emerging, which will help the industry bounce back.